Hey guys, today we're going to learn about stock split. Stocks go up, they go down, they go sideways. And sometimes they do something you might not expect. They split. There are ideally two types of stock splits: conventional and reverse. A conventional stock split of shares is when a company divides its existing shares into more shares. The number of shares increases, but the price of each share decreases. So the total value of the company remains the same. Think of it like cutting a cake. Cutting more pieces doesn't mean you have less cake. You just have smaller pieces. For better understanding, a company XYZ splits its stock 1:10 ratio, meaning each share becomes 1/10 of the price. So, in terms of value, XYZ had 500 shares of rupees 100 each. It went from having 500 shares to 5,000 shares valued at 10 rupees per share. Despite there being more number of shares, the total value of XYZ remained the same at rupees 50,000. A company typically splits its stock when the price of a share is high. Ideally, a lower price allows more investors to buy the stock, potentially to increase its liquidity. So you may wonder, what happens if you own a stock that splits? Just like a split doesn't change total value of a company's shares, it doesn't change the total value of your share. One common belief that investors have regarding stock split is that the stock price will go up after a split. Although some studies show that stock split outperform in the following years. Stock split is not a guarantee that the value of a stock will go up. Investors should do additional research and look at the stock's overall financial health. The opposite of conventional stock split is the reverse stock split. A company decreases its number of shares in order to increase the price of each share. Companies often choose to enact a reverse stock split when shares fall below the minimum price of the exchange listing requirements. Stocks that fall below the exchange minimum are in danger of being delisted, which means they cannot be traded on the exchange. Basically, investors who owned 20 shares valued at rupees 10 each before the split now own one share worth rupees 200 after the reverse split. Though the company hoped that the higher prices would attract investors and reduce the volatility of the stock price still continued to fall. In the end, if you own a stock that splits, the value of the investment will remain the same. Hope you guys found value in this video, and if you would like to learn more about stock trading, do check out Havenspire.in.